Hey guys, how's it going? It's Andy from MagooInvesting. Happy Friday. In this episode of Robinhood Top Stocks, we're going to be talking about Adobe, ticker symbol ADBE. And so this was actually a requested video, so if there's a company you'd like me to go over in a future video, please leave it in the comment section down below. Before we get started, I got to say that I'm not a licensed financial advisor, and I'd highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. So with Adobe and the last video I made, Spotify, these are two companies that I've used for a long time. And so my first run at making YouTube videos back in, it's like 2013 to 2015, I used Adobe for pretty much everything I did. And so now that I've returned to YouTube this past year, Adobe has been a part of my life for the entire year. It's how I edit all my videos, it's how I edit the thumbnails, and it's how I edit all the audio for the videos. And so Adobe is very good at what they do. So they're a software company based out of the Bay Area, and they've been around since the late 80s. And so the things that Adobe are most well known for is Adobe Flash, which is used on most websites, which is interesting because when I looked it up, I found out that Adobe Flash is no longer going to be used overall. And so I thought that was really interesting. But when you look at the company at this point, most of their revenue comes from their Creative Cloud stuff. And so Creative Cloud is kind of this bundle of products that Adobe puts out that includes stuff like Photoshop, Illustrator, Premiere Pro, stuff like that. And so I am currently a Creative Cloud member, and so as a student I get a discount. But when you look at all the stuff that's in that package, I think it's really interesting that they bundle it all together. So talking about the fundamentals of this company, I think it's really interesting to look to see where revenue comes from for the company. One of the most interesting stocks that we've looked at so far has been Microsoft, where Microsoft, if you look at their revenue sources, it's pretty much broken down evenly into thirds between their hardware, software, and their marketing stuff. And so when you look at Adobe, it's not as even as something like Microsoft, where I believe it's around 70% comes from Adobe Creative Cloud, which is, as I mentioned, has the stuff like Photoshop, Illustrator, Premiere. And then the other 30% comes from Adobe Experience Cloud, which is their the software that they give out to businesses to help with their, basically just how they run their business. And so they're very dependent on their Creative Cloud stuff. But when you look at how popular it's been, I think it's pretty solid. When I was looking to see how many people use Creative Cloud, one of the statistics that I saw that I thought was really interesting was that out of the creative professionals, they did some survey, they found that around 90% of them used Photoshop for their daily jobs. And so when you look and see that their most popular product is used by the professionals, I think that's a good sign. So going with fundamentals, stuff that I like looking at is the amount of long-term debt that they hold. And so when I looked at Adobe, I was kind of surprised at how high their long-term debt was. In 2017, they had over $4 billion of long-term debt. And so in the past, for a lot of these companies, when I look at their long-term debt sources, I have a hard time kind of pinpointing where it came from. Adobe, it's really easy. In 2017 and 2018, they had 3 large acquisitions, which make up most of that debt. And so when you look at how much debt they have now, they've done a fantastic job at paying off that debt. And so they went from $4 billion in long-term debt, and now they're under $1 billion. And so out of these 3 large acquisitions, I love the fact that Adobe is putting money on the line to increase their business model. And so when I talked about it was 70% of their revenue comes from Adobe Creative Cloud, their largest acquisition of $4 billion, is the whole point of it was to add on to their Adobe Experience Cloud, which is, as I mentioned, the stuff that they sell to businesses. And so they bought Marketo, I don't know if I'm pronouncing that right, for $4.7 billion. And their business was B2B sales, which is business to business. And so I love the fact that Adobe is taking on long-term debt to acquire companies that can help them in the long run. And the fact that Adobe has been around since the late 80s and their stock price, when I throw that up right now, you can see how reliable it's been over the past. And so when I think about stable, well-run companies, I put Adobe up there with stuff like Apple, Microsoft, and Google. So I said that Adobe is a pretty stable company. And when I put up their trailing 12-month revenue, you can see just the steady increase in revenue over the past couple years. And then when I throw up earnings per share, it's also solid. And so I think Adobe has some of the best fundamentals that I've seen out of a company. Obviously, they're super well run, they're well respected, but I was pretty surprised at how well the fundamentals look overall. So in the past 3 years, Adobe stock has gone up over 215%. And so I kind of broke that down into the 3-year chart, which I'll throw up right now. And I think it's really interesting that Adobe was able to hold its own in 2018 when most of the market fell. 2018, if you remember, at the end of the year, was when the market was getting pretty close to bear market territory, which means that it was fallen 20% from its all-time highs. And when you look at Adobe for 2018, I believe it was up almost 29%. And so even in a year where there was a lot of tension, a lot of people worried that we were going to head into a bear market, Adobe still pulled out 29% of returns. And so I don't think Adobe is going to be a company that's going to make 200% in the next 3 years, but I think based off the fundamentals of what I see and just the history that it's had, I think it's solid for a safe long-term investment. And while this has nothing to do with the stock directly, I think it's really interesting to look at the history of Adobe and Apple, which are two of the largest companies out there. And so based off of my research, I found out that in the mid-'80s, when Adobe first became a company, Steve Jobs wanted to buy Adobe from them. And so Adobe did not let them do that. And Apple was actually one of the largest investors. I believe they got 25% of the company from their investment. And from the 80s to the early 2000s, things changed a lot. And so if you remember, Flash was not allowed on the Apple iPhone and just their iOS stuff. And so there's always been this kind of conflict between Adobe and Apple. It's even gotten to the point where Adobe's put out advertisements that aren't advertising to consumers, they're advertising to Apple saying, oh, we want to work together, we're all in this together, we're all for creatives. I think it's just really interesting to look at the dynamic between the two companies because they both do very similar things. Apple has very similar software, and it's just the fact that they've had conflict over the past couple years is just really interesting to me. And while it has nothing to do really with the stock price and investing, I think it's so funny to look at how close Apple was to buying Adobe, and it didn't work out, and then they kind of conflicted for a while. With that being said, let's hop over the computer and take a look at the charts for Adobe, ticker symbol ADBE, and then we'll finish off the video looking at what the analysts have for the 12-month outlook for Adobe. All right, so here we are back on Robinhood today, taking a look at Adobe, ticker symbol ADBE. I don't know if I mentioned this yet, but it's a pretty expensive stock, sitting around $350 with a 62% buy rating, and it makes sense that only 12,000 people own the stock because it's a little pricey, and Robinhood is more for these smaller investors, so it makes a lot of sense. But when we come to the 1 month, it's up 7%, 3 month is up 31%, 1 year 45%, and 5 years 383%, which is incredible returns. So as we come down here, we see some recent news. 62% buy rating, 38% hold, and 0% sell. As you can see, earnings have been pretty solid. But when we come to the chart, you can see this is back from 2016 or 2015 to present day. You can see the incredible returns that it's had. Recently, it's gone skyward. Went from October of 2019 was at 260, and then currently is at 350. So it has been pedal to the metal and just going skyward for a while. For a stock that's been super reliable in the past, it's kind of hard to chart out some important zones. I charted out right here the end of 2018, which was rough for all stocks. As you can see, it kind of recovered a little bit during the bad times, fell, created a nice zone right here, and has since pushed up past that. But when we put the 10-year month chart up, this is back since 2010, you can see how steady it's been. It's interesting that as we've gotten higher, the candles have become larger. That usually means that since the stock price has become higher, compared to the original scale, it's a higher dollar amount move, but percentage-wise, it's very similar. When we come to CNN Money, which is one of my favorite ways to kind of look at the stock, as you can see, 5 days, it's up 2.4%, 5.5% year to date. As we come down here, you can see that it's a very narrow range for the 1 year price target. And so I think that is kind of the correct move. I think I mentioned how it's up 215% in the past 3 years. I don't think that's realistic for the next 3 years, just based off of the state of the economy and the market. I think this is pretty on point. And so they have the high as 410 and the low of 310. And so I've talked in past videos about the importance of, with reliable investments, you want stuff that the professionals, even their low estimate, isn't down that much. And so 10% for 1 year, if the stock market does go south, I'm totally okay with that. So I think that's a reasonable number to see and go, you know what, I'm okay with that if the stock market does fall. When we come to Yahoo Finance, you can see that I have it as a buy, near fair value, down in the short term, up in the medium and long term, with their 1 year price estimate pretty much even to where it is right now. So they kind of agree with CNN where they have it as pretty even for the average price for the 1 year. So overall, I love Adobe as a company and I love it as a stock. It's probably not the best opportunity in my opinion. Obviously, if you've seen any of these videos before, you'll know that I like taking kind of riskier positions. And I think that's part of the fact that I'm young and losing money isn't the biggest thing in the world for me because, I don't have that much money. But with Adobe, I think it's a great example of the importance of fractional shares that are coming out for Robinhood. And so if you don't know what fractional shares are, it's the ability, instead of just having to buy whole shares of a company where Adobe's sitting at $350, so to buy a single share of Adobe, you'd have to put $350 in. Fractional shares will allow you to buy however much, just a dollar amount of the shares. And so say you're a smaller account and you don't want to put a lot of your portfolio into one stock, you can buy maybe $100 worth of shares or $50 worth of shares. And it makes it so that investors, it's more accessible to get to stuff like Adobe, Berkshire Hathaway that cost thousands of dollars. And so I think this is a great example of why fractional shares are a great thing. On paper, I know a lot of people that have been in the investing community have kind of talked bad about it, saying that there's no real point to it. But even for someone like myself that's pretty confident in investing at this point, I have $1,600 in my Robinhood account right now, and I would not want to buy a full share of Adobe just because it's not the type of investing style I'd like. But when fractional shares come out and I can buy $150, $200, that makes it way more attractive to take position in Adobe. So I think it's just a great example of fractional shares making investing more accessible to everyone, which is great for everyone. Based off of Robinhood bringing out commission-free stuff, it's moved its way onto the larger platforms. And I believe that fractional shares on Robinhood, I don't think it'll move on to the larger platforms right away, but I think in the next couple years, fractional shares will be commonplace overall. So as I mentioned earlier, I don't think that it'll have, the next 3 years for Adobe are going to look the 215% gains that they've had in the past 3 years. However, I think it's still a fantastic company and a great stock. I'm more predicting for the next 3 years, maybe 50 to 70% returns. And so that's still absolutely fantastic, but it's not the 215% that we've seen in the past. So let me know what you think about Adobe stock overall. Do you like the company? Do you like the chart? And let me know what you guys are watching at the beginning of this new year. Thank you so much for watching this episode of Robinhood Top Stocks. I really appreciate you guys. I'm really close to 1,000 subscribers, and I have to thank you all for that. Hope you guys have a fantastic weekend, and I'll see you in the next video.